The untold story of the 2008 financial crisis, how Wall Street broke America. In 2008, America woke up to the worst economic disaster since the Great Depression. Millions lost their homes, jobs vanished overnight, retirement savings evaporated, and the stock market plunged into chaos. But how did we get here? This is the untold story of greed, recklessness, and a system rigged in favor of the elite on Wall Street, one that nearly destroyed the American dream for everyday families. The bubble builds, easy money and risky bets. It all started with the housing boom in the early 2000s. Home prices skyrocketed as banks handed out mortgages like candy, especially subprime loans to people who couldn't really afford them. Wall Street saw dollar signs. They bundled these risky mortgages into complex financial products called mortgage-backed securities, MBS, and collateralized debt obligations, CDOs. Rating agencies slapped AAA grades on them, making them look safe. Big banks like Lehman Brothers, Bear Stearns, and Goldman Sachs made billions selling these toxic assets to investors worldwide. Deregulation under both Republican and Democratic administrations fueled the fire. Rules loosened, oversight vanished, and greed took over. The breaking point, Lehman falls and panic spreads. By 2008, the bubble popped. Homeowners defaulted en masse, toxic assets turned worthless, and the house of cards collapsed. In March, Bear Stearns nearly failed but was bailout out by JP Morgan with Fed help. Then came September 15. Lehman Brothers, a 158-year-old Wall Street giant, filed for the largest bankruptcy in U.S. history. No bailout for Lehman. The decision sent shockwaves globally. Credit froze, stock markets tanked, the Dow dropped over 500 points in a day, and panic gripped the world. The bailouts saving Wall Street, forgetting Main Street. In secret meetings, Treasury Secretary Hank Paulson, Fed Chair Ben Bernanke, and NY Fed President Tim Geithner scrambled to contain the meltdown. They rescued AIG with $85 billion, later more, pushed through the $700 billion TARP bailout, and propped up the too-big-to-fail banks. Wall Street got trillions in aid, loans repaid with interest, bonuses intact. But ordinary Americans, over 8 million jobs lost, 10 million homes foreclosed, unemployment hit 10%. The recovery was slow and uneven, widening the gap between the 1% and everyone else. The lasting damage, how it broke America. The crisis didn't just tank the economy, it shattered trust. Families in places like Ohio, Florida, and Nevada saw neighborhoods gutted by foreclosures, savings wiped out, dreams deferred. It fueled anger that reshaped politics, the rise of the Tea Party, Occupy Wall Street, and populist waves. Few bankers faced jail time. Regulations like Dodd-Frank tried to fix things, but many say the system is still vulnerable. This wasn't just a financial crisis, it was Wall Street breaking America, prioritizing profits over people. 17 years later, the scars remain. Have we learned the lessons, or are we doomed to repeat them? What do you think? Was it greed, bad policy, or both? The story isn't over.